I read 47 books on money. Here's the ones that'll make you rich. In fact, I owe books the credit for all my success. I read every single morning. I even keep a spreadsheet and scorecard for every book I read. If I asked you what's the foundation of money, what would you say? For a long time, I couldn't answer that. I'd give a bunch of terrible answers, but there's only one correct one. It's something that I learned from Rich Dad, Poor Dad. The foundation of money is assets and liabilities. Assets being things that make you money, liabilities being things that cost you money. That's money basic number one. And I like this concept because it makes the whole thing, the money thing, insanely simple. Make sure you have more assets. That's it. Seriously, do that, you'll make money. Although it is important to understand that this advice alone won't protect you 100% from losing money. The more you make, the more you need to be able to separate good financial decisions from bad ones. And here's the problem. Unfortunately, you're a human being. The probability that you'll make a few terrible decisions, it's near 100%. I've made my fair share. I've talked about them here. You've probably heard them. We're just built that way. We just make bad decisions sometimes. But fun fact, terrible decision making becomes terrible conventional wisdom. For example, that old saying like, no risk, no reward. In money, this no risk, no reward is kind of a nightmare. Increased risk comes with a highly likely downside. Huge financial losses that could destroy your life, disproportionately hurt your earnings. Lots of bad things can come from, high risk. Even a small downside can have a huge and negative result. For example, let's say you could choose to earn 16% interest on a $10,000 investment for 10 years. Pretty good. Or you could choose to make 20% returns for 9 years, where the 10th year is a small 15% loss. This doesn't seem too bad, but you'd actually make less money with the 20% returns. Question conventional wisdom and search for low risk, disproportionate reward. The best way to get around this risk issue is to use a time-tested principle that will keep you on track. Surround yourself with smart people. This is something that I learned from the book Think and Grow Rich. In money terms, this means build a network of people who are financially educated and attempting to make good decisions with money. Then bounce your decisions off of them. There is nothing better than knowing someone who is good at something and going, hey, what do you think about this? And then immediately they're like, maybe think this way. It's a game changer. This is money basic number 2. This will help protect you from making terrible human decisions. Napoleon Hill's book is filled with gems like this, from making money to ambition and drive and self-belief. Although, funny story, Napoleon Hill actually spent a lot of time on the run from the authorities and might have been a scumbag con man the whole time. He wrote a good book though. So what's money basic number 3? It's the most valuable financial asset in the world, and it's an asset that almost everyone on earth has access to, but very few truly use it. This is a force that lets your money make money for you. And then even better, the money that you make on your money makes you even more money because you can actually earn money on top of the money that you made. See how many times I just said money? It's called compound interest. It's the strongest money-making force in the entire universe. I first learned about it in the book The Richest Man in Babylon, where the author calls it the third cure for a lean purse. You can tell by that phrase that this is an old book, but it's a good one. This force literally grows your money in an exponential curve. Like that. Sounds like a good deal? It is. So those are the books that I'd advise you to read if you wanted to learn the basics. But what about the rules of money, the nitty-gritty laws that you absolutely need to understand once you're past the basics? When I was 15, I had no clue about investing. Stocks with weird names, meaningless reports everywhere, bullshit charts that look like sideways lightning bolts. In my head, investing was basically buying a thing and then crossing your fingers that you just wake up rich tomorrow. Then the luckiest thing ever happened. I was honest. I realized I had no understanding what I was looking at, and any investing that I did would be at best a guess, at worst totally gambling. Which led me to a realization. I had skipped the boring work. I wanted to invest, but I'd skipped the part where I learned about the math behind a profitable business, the magic of financial statements. This changed everything for me. I could not only invest, but it's also the reason why I ran an insanely profitable business just a few years later. I jumped in, I had this knowledge, and I was way better off than my competitors because I had this knowledge. Never skip the boring work. Just do it! So I went back, I read these books. I read books like Financial Statements, A Step-by-Step Guide, and The Principles of Corporate Finance, but they weren't fun. However, they made the biggest difference. I learned how money is generated and reported by companies, which meant that the stock market and all of the financial information it tracked started making total sense. I could start manipulating it. That's when you really know you understand something, when you can look at the information and then mentally manipulate, oh, if I pull this lever, then this will happen. You start to build a mental model around it. Fun fact, look for businesses that have deep cash reserves increasing profits, and low debt. That's a good starting point. Successful businesses operate similarly to successful people, which makes sense because a business is just basically a whole bunch of people working together. But the best businesses hoard a lot of cash, just like successful people save a lot of their paycheck. Apple, for instance, has $167 billion in cash just sitting there, and investments too. Google, Microsoft, and Berkshire Hathaway, they all have massive stockpiles of cash as well. The reason for this is so obvious. It gives them a financial buffer to survive tough times and also invest when there's something that comes up. They're like, boom, I can make $1 billion off of this. Now, this all leads me to the next books, and a statement that most investors will agree with. At the start, you think everyone knows what they're doing. After a few years, you'll realize that no one does. The first time that this began to hit home for me was in the book called A Random Walk Down Wall Street, which has one clear message. Stock market prices are so random that you have almost zero chance of being able to predict them, which is another way of saying don't speculate.
Get some help.
This idea is further hammered home in books like The Intelligent Investor. Totally recommend that, which basically tells you to avoid speculating at all costs. It says only invest where there is clear value at a discounted price. Don't invest in hype or the news of the day. Only value, never speculate. It's like, okay, I got it. Avoid speculating. Now what? Well, The Little Book of Common Sense Investing by John Bogle makes a pretty compelling argument for low-cost index trackers, which never speculate on the market. They just match the market's performance over time. This is pretty great for most people. It's advice I follow for most of my portfolio. It's way less complicated, way quicker, and way cheaper than you'd think. You just need an ETF like the VOO, which tracks market activity of the S&P 500, which is the 500 most influential US public companies. The earlier you invest, the more your money is likely to grow, as the S&P, despite all of its randomness and chaos and news and whatever, trends in this direction. I like to use this app, Webull, to do it. Type up VOO and invest if you'd like. There's a link for Webull in the description. Feel free to click that to get started. If you use that link, you'll get some free stocks and I'll get a commission, so feel free to benefit from it. But if you really want to ignore that and speculate instead, because, f it, why not? Then you'll want to read this next book, which taught me an investing principle that I will never forget. If you look at a company's financials and see that it's worth, the stock is $100, you'd think that paying $100 is the right idea. Like, that's just what it's worth. But remember, you're human and you make mistakes, and so does everyone else. And guess what the market is made up of? Humans. That's why it's erratic. So that $100, that could go in any direction. You don't know for sure. What you actually want to do is aim to get the stock for a price way below. Way down here. It's $100, you want it down here. Don't pay $100 for a stock that's worth $100, pay $50 for a stock that's worth $100. Of course, that takes skill to identify, but the $50 difference here, that is something in security analysis that they call a margin of safety. You'll either get a great stock at $50 discounts, or you'll get a $50 risk buffer. Both of those are great. Remember the fun fact from earlier? Less risk, disproportionate reward. This will help you do exactly that. If you want to avoid losing money, you have to understand this. So go ahead, buy that book. Take the time to read it, learn it. It will protect you in your investing. Also, fun fact, when determining the value of a business, you need to think long term. Your goal is to make money over a long period of time. With investing, this could be a period of 30 years. So you want a business with strong prospects, with a solid track record that's likely to grow over time. Obviously, calculating future earnings is imperfect. It's basically a guess. It's an estimate based on your knowledge and where the market is headed, which further calls for this margin of safety. But you still want to look for businesses with long-term growth potential rather than short-term price spikes. This book will help you do exactly that. Did you know this? You can read about the lives of people who have made truckloads of cash and then just steal their good decisions. This is one of the best hacks in human history. This is exactly why everyone should read. But weirdly, nobody thinks about using biographies to make money. Don't make this mistake. Read biographies of the rich people that you want to be one of. There are thousands to choose from, but here's some great ones. Steve Jobs by Isaacson, The Snowball, Shoe Dog, Richard Branson's Losing My Virginity, Titan, The Life of John D. Rockefeller, and Made in America. Those are all great. If I had to choose one from that list that's like my favorite, that'd be Titan, because it taught me that some men, like Rockefeller, are simply forces of nature. Like, they just kill. Before the age of 30, Rockefeller owned something like 90% of the entire oil industry in the US. 90%. Think about that. It's hard to even fathom. There's one skill that's more important than any other for making money, but most people ignore it. They focus on saving, investing, like you probably want to do, but it doesn't matter how much you save or invest when you don't have this skill in your tool belt. If you don't have it, you're never going to maximize your wealth potential. The skill is selling. If you can't sell yourself, your skills, your product, your time, your brand, you're in deep shit. You are. You just are. So what books teach you how to sell? Well, there's tons of good ones, but there's 3 that I always seem to come back to, and here's something powerful from each of those 3. Knowing your product is good, but knowing how people emotionally react to it is better. That's from a book called the Collier Letters book, which I have down on the shelf here. 2, people only buy what they understand, so be as clear as possible. That's from the Copywriter's Handbook, which I'm actually forcing my girlfriend to read right now. And 3, people don't buy based on logic, they buy based on snap generalizations that they continually fall back on. That's from Influence, which coincidentally is probably the most influential book I've ever read in my whole life. If I track back the progress of my life, so many things lead to that single book that I read, Influence, when I was like 19 years old. If you want to make money, don't sell someone on a product, sell them a concept. That is the overarching idea in a lot of these books. For example, don't sell a swimming pool, sell relaxation in the summer. Don't sell a watch, sell the status that a watch gives you. Always ask yourself, what's the concept that they're buying? And typically this leads back to some emotional, primal human need. Don't skip these books, read them. Now, these books will teach you how to make money, but unfortunately, none of them will work right now because the world is basically rigged to give you big losses. The reason for this is you're bombarded with emotionally charged news which leads you to making rash investments and poor ideas, more human ideas, which I explain how to avoid in this video. So check it out and learn how you can dodge this fatal mistake. Love you, goodbye.